So Michael Burry had a tweet yesterday about something called the Bullwhip effect. Not really sure what he meant by the Bullwhip effect, but he's talking about this phenomenon at retailers where their inventories are building. And if you're a retailer and your inventories are building, what that means is that you're eventually going to have to cut prices, which is deflationary. And there's all kinds of deflationary signals going on in the market right now. We're getting all this economic data that's getting worse and worse and worse. Commodity prices are actually falling. I mean, you may not realize this, but in the last 2 or 3 weeks, commodity prices have been falling a lot. And if you take all this together, what it probably means is that the next CPI print that comes out this month is going to be less than 8.6%. I do believe that inflation is going to fall, which kind of brings up an interesting argument. Is inflation transitory? And we have these effects and you had lots of pandemic hoarding. So what the Fed is trying to see is progress on inflation. And what do they mean by progress? Well, probably 2 or 3 months worth of declining inflation data. And if you take this in combination with the rest of the data, which is absolutely collapsing, I think it's very possible that the Fed could pause in September. And what I mean by that is they actually might have a 25 basis point hike. So Michael Burry isn't saying anything original. There's a lot of people in the markets who have the same beliefs that he do, that we're actually having a deflationary impulse. But when he says it, it has a lot more weight. And I think people should pay attention because we're of this mindset that we're in this big inflationary super cycle. And I do think that's true. But in the short term, we are going to have a short-term deflationary impulse.